Good morning guys, welcome to the weekend. Hope you guys have all had a good week. I am Dan from Trading with Dan. This is our Bitcoin morning update, so if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yeah, it was a pretty difficult week last week for Bitcoin. As you can see, we obviously had this big sell-off. We regained this important horizontal area here. We back-tested basically what was the more important breakdown point for this upper range that we had been trading in, this one here. And then we basically came back down and tested the midpoint of the range that we managed to hold on a closing basis after the initial dump. So yeah, all we're really doing is bouncing around within this sideways range. Obviously we are closer to the bottom side at the moment. We need to try and work our way back towards the top side, and then obviously work our way through the top side to be bullish. But obviously things not looking the greatest here. We're talking about our potential head and shoulders here. But realistically, I'd more look at the fact we're just going to trade sideways within this range. And yeah, the neckline of the head and shoulders is this lower level. Obviously the top of our range is up here, so if we break below here, yes, we'll be coming down to test that 41, 42 area again. And if we break back above, we can probably find ourselves turning back around bullish again and start to have some sustained green price action. But yeah, definitely not as all lost at the moment. I mean, we're obviously testing the patience of the bulls. The bears are getting quite confident, but ultimately at some point we can potentially have a nice aggressive move back upwards, a nice short squeeze at some point. And I guess this is just a nice cooling off after what is pretty much a massive move up, as we can see, and on this higher time frame chart, you can kind of see we are consolidating nicely near these highs in what pretty much looks like a bull flag. This is a bullish formation. Ultimately, it doesn't have to break to the upside, but it is a bullish formation in a bullish, a long-term bullish trend that has a higher chance statistically of breaking to the upside. So we have always got that to fall back on. When in doubt, pull out, basically. If you want to look at the Ethereum Satoshi pairing, it did have a nice pullback as well into basically this horizontal here, nicely holding above it at the moment. Obviously this is a sort of an inflection point where it does need to bounce from here. It does need to continue up. We could probably draw a nice looking trend line in here as well, where we are currently operating with, so we do realistically need to hold this horizontal and this trend line. Otherwise, yeah, we could come back down to this box, which we'll just extend along a little bit as well, just because it may be of importance going forwards. I mean, we hope it isn't, but it may be of importance going forward. So yeah, at a point where this kind of needs to turn around, otherwise things could start to look worse. But if it does turn around here, things will start to look very good. The Ethereum USD pairing, again, having a little foray down into the lower level of our channel, the channel we're in here. You can see this channel here between, basically we can call it pretty much 4,000 and 4,500. Looking to try and hold the bottom of here and then push on upwards as well. Again, similar to yesterday's video, inflection point still flirting with these levels. The USD pairing needs to bounce from here. The Satoshi pairing needs to bounce from here. The Bitcoin price needs to continue bouncing from here. Yeah, that is what we are playing with. If you want to look at some things that are potentially looking good, obviously we have this nice forward check, back check, and pay check. From breaking above that trend line here. Obviously CPI coming in at basically a sub 7% handle was always going to be good for markets, because markets were sort of anticipating themselves for the worst. I mean, if we come in with say a 7.1, 7.2 print for that CPI number, yeah, I think markets would have hated that. it would have brought even more focus to potential Fed speeding up with the well, in inverted commas, tightening. But it was good not to see that. So yeah, I mean, I know consensus was around the 6.8%. That was the prediction, but we all know those consensus predictions have all been widely understating the actual number of late. So to actually see it come in at that, I mean, people were expecting, oh no, it's going to be 7.1, 7.2, which case would have hit the market. And you can clearly see the market rallied bullishly off basically the consensus number, which again, like I said, was good. Is good because we ultimately we are a liquidity Fed-driven Ponzi market. I mean, these are prices are denominated in dollars, same as crypto prices denominated in dollars. It's pretty much the purchasing power of the dollar that is getting eroded here. So yeah, I mean, but this is obviously a very, very good close going into the weekend. People will be eyeing this up as well. Yeah, as very bullish, as in we can easily start to trade higher and going and enter the next phase of our crack up boom. DXY easing off a tad as well, but nothing really too untowards here. I mean, we're getting to the point where we could draw in a pennant, a symmetrical pennant. We're gonna mess this up with too many lines if I draw it. So I'm not going to draw it, but you can kind of see it like here and here. And yeah, I mean, clearly off the back of a bull trend, could it break to the upside? Very likely. In fact, we will draw the top side of it on pretty much. We'll draw the top side because that isn't really going to cause us much problems. And then, but breaking above here, we could very easily see another leg up. And if we want to do a bull flag, I mean. This is clearly my bias shown here because I just think this is not going to necessarily happen, but it could very easily happen. To be honest, it could happen. We'll probably draw in until about there. We could be looking at we could very easily be looking at a leg up into, into the 99 handles. So yeah, we've got to be aware of that. I personally think that the dollar is going to fall back below this trend line here and actually then fall back into this ascending broadening wedge and then come and test this horizontal here, at which point that will be, I believe, if this is to happen, will be the final leg that I will stay in risk assets. Basically, I think we'll get a big massive pump in risk assets, stocks, crypto, everything in the process of this move, and then I won't hang around to see whether we lose this horizontal, lose this trend line, lose the massive ascending broadening wedge and break down for even more euphoric action. I will probably be looking to GTFO and just sit and watch from the sidelines. Probably leave crypto forever, and maybe come back in a couple of weeks after. Who knows? But yeah, so yeah, there you go. That is kind of what I am looking at here. We shall see what happens. Oil, not actually taking out its trend line. So yeah, we can see that there. Oil is something that isn't as driven by liquidity. It's more driven by the supply constraints, to be honest, rather than just pure liquidity driving it. And obviously, if we are going to have problems in the economy going forwards, the real economy that is, then we could expect this to not potentially perform as well as stock markets, but I mean, it's clearly at this trend line, knocking on its door, wanting to break up and have a nice aggressive move up. We'll just have a glance at shift coin, at gold. Yeah, just not really doing anything. 10-year yield as well, in and around this area. In all fairness, I would say we just don't want any real attention brought to this. I mean, the curve is flattening, and it's flattening at the short end as well, which is not particularly good. But like I said, I do think that is in error. I think the rallying, basically the rallying in yields, the sell-off at the front end, I think is wrong. But who am I to argue with the bond market? But I have seen the bond market be wrong on lots of occasions in the past. And I mean, we are at one of those points where it's like, is the bond market or is the stock market wrong? And it tends to be the stock market that is wrong. But we shall see. We shall see in this new paradigm. It is different now, of course, isn't it? It's different now. We all know that. It's different this time. Bitcoin dominance pulling back into our resistance area here. Again, that's sort of an inflection point at 409. Do we turn back around from here and come back down, or do we actually break up and then start to go bullish for a period of time? We shall have to see. We'll have a quick glance at Nascoin. Yeah, there or thereabouts. Let's look at the underperforming Russell. I mean, miles away from this is more of a gauge of the real economy. To see us actually break out, everyone getting really excited about the Russell being above this level, and then to see it absolutely slammed straight back down to what we could pretty much will draw it in. Which is pretty much this bottom side area. Where do we draw it? Yeah, we'll draw it here. To see us basically come straight back down to this area is just par for the course, basically, for the real economy. The Russell more representative of the real economy. We don't have a broad rally in stocks. It is just a few names, a few of those of mainly those tech names that we know. I mean, a lot of it is driven by flows into ETF flows, into FANG stocks and S&P S&P contracts. But yeah, so obviously all these other cryptos, all these other companies in the real economy not really getting the same sort of attention. But yeah, pretty bad to see it swing. This is an example of what I'm kind of expecting the dollar. Obviously, this is a sideways channel rather than an ascending broadening wedge, but a pump above, a swing failure, back in and straight back down to test the bottom level. That is what I'm expecting, but we shall see. I may be massively wrong on that. Remember, the DXY is a relative trade. The DXY can still strengthen if all other currencies. It can strengthen against other currencies if all other currencies are just even weaker than the dollar is against real things. So yes. What else do I want to look at? Not much else really here. We'll look at the stochastic. Oh, one thing I did want, one not really crypto related, more YouTube related. You may notice that we now have likes where you have a like count, and then dislike where you don't have a dislike count. Clearly, YouTube is preparing for the 2022 midterms, I think they're called, where they obviously, when the Democrats are going to start having videos or news articles and stuff, it will be overwhelmingly obvious that all the dislikes will be massively higher than the likes. So literally, they're just front running that by actually getting rid of the dislike count. So that is again is just it's just the scammy nature of the state of affairs at the moment. I mean, that is I can tell you now that is 100% why that is happening. They just don't want people seeing all the dislikes, and all when you see all like the global pandemic stuff and people post various videos or news articles and they just get massive amounts of dislikes relative to the likes, and it clearly paints a picture of what the overall view is. They just don't want people to see that overall view now. So YouTubers like, well, as soon as it ain't going to benefit us and the left and our manipulation, we'll just get rid of it. So yeah, anyway, a little tangent there, because I did notice it and I wondered why. And I wondered why for about less than a fraction of a second, which should also be a fraction of a second, wouldn't it? A fraction of a fraction is still a fraction. But yeah, and I was like, yeah, that is why, because you see all the videos where have all the dislikes relative to the likes, and then you just kind of they are from a certain political wing, we shall call it. So stochastics 4 hour turning up here. Can you get us back towards 50,000? Come on stochastics, 4 hour stochastics. yeah, but anyway, nonetheless, turned up here. 10 hour getting deep, looking to turn back up from a deep level. Daily sort of grinding its way up. I mean, sorry, yeah, 12 hour. If it can turn back up and end up in the bullish zone as well, that will actually be particularly good for us as well. So for our can turn 10 hour up, get us up to 50,000. This will turn up, and then this will be in the bullish zone, bullish half, and then yeah, we could actually start to recover, and Bitcoin can try and make a beeline to that top half. If that does happen, we'll turn the daily back up also. Bi-daily moving up from a low level, 3-day looking to turn up from a low level, 5 days still diving, weekly still diving, bi-weekly up and monthly up. So yeah, if basically we can get above 50,000, we can turn a lot of these stochastics will be pointing up and turning up on a lot of time frames. I believe we've got a good shot, a good shot of getting up towards the top of the range. Ultimately, that is kind of how I see things anyway. We bounce around these ranges, we trade sideways more often than we trend for a longer period of time than we trend, and then obviously then we break up or up or down. But yeah, if we can basically get above to 50,000, we'll turn these up, and then yeah, we'll at the very least come and test the top 52, 53. But I do think we would have a good chance of breaking above here and go bullish again. I think the market is very bearish at the moment. We've had all that congressional inquest and whatever with Sam Bankman-Fried or whatever his name is, and all that cool fuddy sort of stuff. We've had the inflation scares. We've had the stock market basically pull back, but now basically that is all-time highs. It does seem now that everything is set now for a bullish cycle, a bullish news cycle, a bullish price cycle in crypto. Yeah, that's how I'm pretty much seeing things. I think next week could be quite quite bullish, and yeah, we shall see how it goes. Remember, this is not financial advice. I want to be imposing my my ever optimistic views on things, but hey, that is what it is. Thanks for listening. Remember, this is not financial advice. I am on a night out tonight, yeah, I might post some pictures and stuff and whatever in the Telegram chat, just for a laugh. Some of my friends for some random reason have booked a limo, so that'll be interesting. I know we're not 12 anymore, we're not going to prom, but it's just something to do, isn't it? So yeah, thank you for listening, guys, and I shall speak to you guys soon.